station of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come and parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great, Adam. Yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling problem with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all are having a fantastic day. Quite the turnaround, of course, on some tariff news. A lot of stuff to kind of unpack here. Of course, we're going to have Basil Chapman on today. We're also going to have Tim Ord on. Take a look. If you are not in the Tiger's Den, I've got to recommend doing this because it has been fantastic today. I got in some calls for June in the VIX at a 42.50 strike. Give me a second. What am I looking at? Right here. Tiger's Den trading room. And man, those are up right now 58%. This is why, I mean, you know, you've been listening to Larry, right? He's been kind of bearish. A lot of people have been bearish, but intermediate term bullish. A lot of our analysts have been as well. A lot of our traders. For me, I have a much lower kind of risk tolerance. I think for, circumstances like this. So I thought buying calls might be an interesting idea on VIX. And I mean, man, if you bought it today at the lows, like 37, you would have been making some pretty good gains right now. I still think there's a lot of room for this VIX to spike. Really, a lot of this, I believe, was just kind of like a relief rally. Nothing really improved. Things have gotten much worse. We're not even at testing the lows yet of 481.80. So at 498.19. So breaking below that 5,000 level is pretty intense. Of course, you have tariffs, the actual ones, placed tomorrow, right? All of this has simply just been kind of positioning on a global scale, and now they're going to get implemented. There is so much, contradiction on what's being said, right? Are we implementing the tariffs in order to get better trade deals? Are we implementing the tariffs in order to bring back manufacturing to the U.S.? Is the stock market crashing so we can get the 10-year yield down? Or is it going back up because the tariffs actually work and people are betting on America? It's pretty important, I think, to tune out all of this, especially with all the fake headlines we've been getting, which has been moving the markets. I mean, it's actually unbelievable. And so to tune out that noise, I strongly recommend going over to TFNN.com. One, you can listen to us right here. We're on from 9 a.m. to about 4 p.m. Eastern time. But check out some of our newsletters, okay? And the one I'm going to talk about right now is the opening call newsletter by Basil Chapman. Basil is, one, he's accessible, right? If you're in the den, you can talk to him. If he's there, he's going to answer. He's always updating this. On the Fridays, you're going to have a very long overview of what went on in the market, what we're looking forward to. Basil has put on some very nice trades recently, ones that honestly I didn't even think to put on. I've been following what he's doing, and they worked. And that's really you only get that from decades of trading experience, right? So right now, let's move over to Basil Chapman. Basil, how are you doing?
I'm doing well, and thank you very much for those kind words. I just want to clarify that today I did, and I'll explain what I did. I did go along waiting for a pullback from the very strong open in the Dow, and we got that pullback, but we got stopped out because I still have pretty tight stops.
Yeah.
And and I'll explain what I was doing. So you're talking about the volatility index called the VIX. So if you look at the VIX had a huge spike. Within 2 days, it went from 31 up to 60.17.
Yes.
Now, if you look at this, I'll just open this chart up right here. This is the weekly chart. You can see these long wicks and a very sharp pullback. Let me scroll across. And most of the time, as soon as a high is made and it hits this kind of trend line here, it would come down very sharply. Then we had that overnight Japan. It was a currency issue, and Japan had this huge spike up at 65.73 in the volatility index back in, I think it was July. I forgot to put the date. Yeah, August the 9th, the week of the 9th, and then it pulled back very sharply. And what I was looking for is that as this move was going up last week, and for the first time we actually closed on a weekly basis really strong, up in the 40s. My impression was that the Friday was so ugly, that was this past Friday, that there was a really good chance, under the circumstances that I've looked at, really serious lows over the many years that I've been, decades that I've been doing this, that there'd be some kind of a rally, even if it's just an oversold rally, and that volatility index, if it spikes up on, this is a weekly chart, so if it spikes up on Monday very sharply, then starts to pull back, that we could get a pretty good rally. Well, with that in mind, and you can see here on the monthly chart, I've got the same thing on the volatility index. The spikes don't last very long.
No.
In fact, they have long wicks because they have a huge move to the upside. I mean, this one I could go back even further. This one's going back right there. It's Greece. I don't think anybody remembers the Greece crisis back in August of 2011. But each time it would spike very sharply soon afterwards, sometimes immediately. So my thinking was that on a purely technical basis, there was a really good chance that we would get that spike. Well, the rally of 1,300, 1,400 points in the futures and then in the Dow this morning, that to me, maybe it did everything that I wanted, but it did it in an hour instead of over a couple of days. So in that particular regard, we went long the Dow, and that failed. So I'll explain what I'm now looking at, because this is a very good indication that something's going on that we need to be very, very observant of.
Yeah. You know, I have a question, Basil. If you can hear me?
Yes.
Okay. You know, so I took out a call in the VIX, right? And really I was looking kind of I don't really want to hold it to expiration, but I see the incoming kind of volatility, right? And I was lucky to kind of get in before it was really ramping up today. When you get this rapid deflation very quickly, right? I mean, it's not like this kind of moves this
price.
What's that now?
The deflation of price.
Right.
Yes.
Right. How, my point being is I'm really thinking of kind of taking profits because the percent gain is so high right now. I mean, are you seeing any further kind of volatility at these levels? I mean, can you get just really major movements to the downside and not really have these major tick-ups? I mean, do these charts indicate anything to you on that?
Yes. So that's what I was talking about this past Friday. It's one of the first Fridays that we've actually closed as strong as this. And that said, there was a really good chance that Monday could be a climatic turn. Oops, it got a break coming up.
Yeah. Well,
all right.
Yeah, Basil, stay right there, folks. We'll be right back with Basil after the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Basil Chapman. Basil, before we went to the break, we were looking at the VIX.
So, Jacob, this is one of the things that I would consider.
Yeah.
Here's the VIX daily on the left. This is the daily chart, and this is the weekly chart in the middle, and the monthly chart on the right. As it stands now, with the Dow down 371 when it was trading 1,300, 1,400 points earlier, that is a sign that says whatever was going on for the reversal is just now completely negated. So let's just put that aside.
Yeah.
But this is the concern. Your question is pertinent to, do I buy or do I hold? What should I do? So my answer to you is, if you have call options, one of the things that I always consider, and we've done this with subscribers, I always say you want to stay in the game. So you must take some profits when you can. Dave White used a wonderful expression, take it when you can, not when you have to. Yeah. And I would just take something to reward yourself, pat yourself on the back in a physical way by taking something off, and then have your core position the way you entered it, and then have maybe another one or two, if you have the choice, to be able to raise them with a trading stop. Now, overnight, if this continues, this volatility index could really go right through the 60.17 high of yesterday.
Totally.
So in that particular instance, you've got your core position. If you've got options, I don't know if you're able to trade your options overnight, but then that means you could take maybe a little bit more off, but keep something so that you're in the game all the way through. Because what you've got now, look, here's the bonds. This is the daily chart of the bonds. Look, it made that fourth highest peak that we always look at for the in the Chapman wave. Objective is to go to 4 higher peaks, peak D, and then you must assess. Look at this slide. This is telling you, and last week when we spoke, you said, I think bonds are breaking out in the shorter term. This is the first time that the markets come down in a long time, and bonds, the old safety thing that people used to talk about, which didn't work for a couple of years, is working because money's going into the bonds. All of a sudden, look, you're going from 122 down to 116. That's serious stuff.
Totally.
And the other thing is, when you're looking at this, you've got other areas that should be rallying, just at least having a bit of a breather, like the Russell 2000. And the Russell 2000 was up at 185 earlier today, and now it's down at 174, almost back to the low of yesterday. So areas that, and the other thing is gold. Gold is down from the high of today. It had a very nice move of 50-something points, but it made that 32.01 high on the second, and it's come straight down. So I always look at gold as the geopolitical economic safety haven, and it's not working right now.
No.
So things are very different. there's a concern, and I think it's China. I think that China is going to, give quite a bit of give back a little to Trump. They're not going to give in very, very easily. That's the way it looks right now, and I think that that's the big thing, and that's why I'm saying to you, reward yourself by, in something like the volatility index, take something off and have maybe the core, and then have another position that's like a trading stop going into the close. But in this particular instance, the patterns that we're looking for, especially if I go back to the Dow, this should have been a V-shaped rally that at least went to the gap of just a few days ago up into the 40,000 area. So this is very disturbing to me, because you had that huge, one of the highest volatility index readings in a long time, should have had an automatic signal that said a low, not necessarily the low, but a low was made yesterday morning, and now we should be moving higher. There was every opportunity to do it, and that failed. And when I see a failure like that, I say something's different, something's wrong. And therefore and we've raised a tremendous amount of cash from subscribers from opening call. As I say, we did have attempts this morning. That didn't work. Yesterday, we actually bought almost the very low of the Dow, an aggressive position, UDOW, and it actually worked out. We made a little bit of money, and then it took us out. And if we had held that position, we would have had a huge cushion, because it was almost at the lows yesterday, and there was a huge move up. So timing, I think, is really important, and it's trying to get the extremes of the market that gives you a little bit of a cushion. And that's the reason why I always try to get the lows of the highs. We were fortunate we did get the Dow short near the high and the S&P near the high, ran it down, took profits on the way down, got out of it this morning completely, that was a mistake, but it was a really good gain.
Yeah, no,
Needed
definitely.
to take that. But the most important thing right now is a market failure that had all the specs that certainly I look for as a pretty serious multi-day, even sometimes a multi-week rally, has not held. The day is young. We haven't taken out yesterday's low, but that is not something that I like. This is something that makes me really cautious. And as I say, we've got money to put to work. We're just waiting for the right time to, and we'll step in different areas. Even look, U.S. Steel suddenly had this spectacular move yesterday, and the SLX, the steel index, didn't really move very much. Look at this. Here's U.S. Steel, but mostly it's a takeover candidate. But you've got these isolated big spikes to the upside. So I'm looking at this and I'm saying, I don't feel like there's a whole sector that's moving strongly. It's like individual stocks. And I would prefer to see at this particular time a sector saying, hey, that's the favorite sector. I don't see anything that says, buy me. It says, you can buy me, but you better be real careful. So this is tentative moment in the market. This give back today is something that disturbs me a lot.
No, definitely. And I mean, steel was what, I have a whole kind of portfolio that I'm working, a watch list at least, right, of, what happens if we start trying to reindustrialize in a way, right?
Right.
Even sectors that are obviously going to get exposed to tariffs, right? And so U.S. kind of companies that produce that, let's say steel, for instance, might catch a bid. Yep. You've seen none of that. I mean, Steel Dynamics.
Aluminum, steel.
Yeah.
It just the thing is, it doesn't happen overnight. It's a process.
Sure.
It takes quite a while to implement.
Yeah, absolutely. It's just I think I think the market is scared in a way. Exactly what we were talking about. You're finally starting to see some fear and capital coming out of equities flowing back into the 10-year. You're getting yield suppression that way, and now we're nearly right back to where we started. I mean, I think you're very close to 4.3% in the 10-year. So the question is, where is this kind of capital going right now? And I think it's I mean, same as you. I'm in just cash right now, and I'm ready to deploy, but I haven't seen any strength. I've seen the optimism still there, right, for for the bulls to want to get back in and snap this rally up, but it just can't sustain itself. It seems like.
It's not the one-off. You want sequential highs. In other words, it's really the weekly charts that need to start making higher highs and hold it for a week or two or three. haven't been able to do that. A pattern that I look at all the time is this pattern that I call the dreaded H.
Yep.
Comes down sharply, arches over, fails at a peak A or a B, takes out the left side low, and you can see that. I mean, look, here is the Dow chart, INDU, look, there it is, arching over. Right there's your dreaded H, took it right out. Here's the larger arch. But you know what's interesting is the monthly charts are still very strong. The 9-period moving average, that is the 9-period moving average, is way above the 14. Either we're going to be going down for quite a while or we're going to have some decent turn, hopefully very soon.
Basil, thank you so much for coming on. Looking forward to see you at 10 a.m. Eastern Time tomorrow, okay?
Thank you very much, Jacob. Have a good evening.
You too. Folks, check out Opening Call Newsletter. Now is the best time. Stay right there. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call Newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We're working right now, getting Tim Ord on the line. However, I really do want to talk about it. Check out Opening Call Newsletter. Listen, if this is your first time listening to us, I know it can be strange, buying stuff online, but we have a 30-day money-back guarantee. We really believe in these products, and that's why we offer that. So, check it out. You can do this risk-free if it's your first time subscribing. Now is as good a time as ever. Additionally, with Basil, you can get access to his 90-minute live webinar that he just did for subscribers. Again, that's a massive value added for that. Okay, let's take a look at the SPY. Actually, I want to take a look at my thing here. The VIX coming down just a little bit, probably because people are loading up to the downside there. Man, what a reversal. I mean, these kind of moves in the day, I mean, these is trillions of dollars, right? What are you looking at here? You had a high of the day of like 524, and you're all the way down at 496 right now. This is kind of what I was saying yesterday, right? Where you had this massive blow up, okay, on really what was complete just trash news. It wasn't real, it didn't matter. But what I found during that is even after it was clarified that the 90-day extension was not true, you still had so many laggards in it, right? That were like, massive influencers were talking about it, like, oh, the 90-day tariff still might, or the 90-day extension is probably what's sending the market up. But it's like, guys, that's like 6 hours ago and it's not real, and things had gotten worse. So, I mean, at that point, what is it? Short covering? Is it like trade pods being strange? Is it retail thinking it's all over? And, the fact of the matter is the conditions aren't better. And I think we're getting into a serious problem. Like, let's talk about what was being said over the weekend, where you're seeing the capital flow out of the equities, but you're still seeing, you're getting the 10-year yield down, right? That was the whole point, right? So you can refinance in June. That's gone now. I mean, we're trading at 4.247, 4.25 in the 10-year. That is massive movement in the yields. And so this, I think, what they were bringing up this weekend is a legitimate fear. And we've been talking about this on this show for a while, that can they even refinance at these levels? I mean, I think it's something like 3.2 billion roughly of debt generated during COVID that's coming up, not to mention commercial real estate and the issues that poses when that gets realized. The loss for that gets realized on things like JP Morgan's balance sheet. It owns like 12% of commercial real estate. I mean, these are like some severe problems, I think, that exist. And I've not heard many good arguments for why it's like okay. And honestly, exactly what Basil was saying, like usually you see like an oversold rally and it can putter on for some time and you're going to test that gap up. I mean, there is nothing today on it, really. And it surprised me that it was rallying up this much. I mean, that was just a pretty clear bull trap, So, I mean, we'll see what happens. I mean, the volume is, less today than it has been the past 2 days. But I mean, this thing can keep going low, and there's still just so much uncertainty. I mean, we're below. I mean, I was looking at April levels for a lot of equities, including just this market in general, and we've completely coasted past those. We've given up an entire year in value right now in the market at 494.47. Looking at, give me 1 second. Looking at what happened with Trump, I mean, what is it, an 104% tariff on Chinese goods effective at midnight? Is China going to acquiesce? Like, I don't know. Probably not. And if they do, they're going to make it very difficult for us, right? And again, tariffs are being implemented over the night. Does Europe seem like they want to deal with us? Like, no. Japan doesn't seem like they want to deal with us either. South Korea, I guess, said, hey, it's okay, we're going to try to work through something. But if you look at like what will actually happen and what this work through looks like, it's going to be something like what you saw with Netanyahu, right? And it's all these ideas that people are saying where it's like, okay, we're going to lower the trade barriers, we're going to remove the tariffs from these other countries, or they're going to remove it, and we'll have a more, free kind of trade deal. And it's like it has nothing to do with the trade barriers or the tariffs. Again, as we've been talking about constantly, from the perspective of the country, you're having a surplus to export ratio, right? And that is, again, not a way to do things. And but that's what they're going off of. And you hear people like Netanyahu say, we're going to work to get our imports and exports balanced with the U.S. And if that's the way they're trying to approach this to resolve the tariffs, I mean, who even knows what that looks like? I mean, a country like Vietnam will never be able to do something like that. Cambodia can never do something like that. What are we going to sell to the Chinese? I mean, all this stuff is very bizarre. And, you know, it's just a little worrisome, I think. So, point being is you can have, honestly, this wasn't even like necessarily a great face rip rally. I mean, it kind of was yesterday, right? But again, on fake news. Today, massive bar. But there's still volatility that's going to be in this, and there are still ways to go, in my opinion, to the downside until this gets resolved. And again, I think there are larger problems that exist. It's not just the tariffs, right? I mean, that's like, you know, the spark in the matchbox. But there are some serious problems we're going to have to figure out here as a nation coming, you know, before this big debt wall. And I mean, in theory, what you could do, and I don't know if it necessarily, you know, I know we did a lot of short-term debt over the past few years under Yellen, and that's fine. We get to refinance that a little bit lower. You know, can you start issuing short-term debt to pay over that longer term? I don't know what they're going to do with it. But I mean, look at this. The SPY's off 2.29% right now. Dow Jones Industrial off 1.59, off 602 points, just giving back any kind of gain that it had. So, now, something that I do think is kind of interesting and might actually present somewhat of a short-term kind of play is crude, right? So, in my opinion, this isn't necessarily matching market dynamics. I think a lot of, one, you're just seeing all asset classes just kind of get crushed right now. I mean, even debt doesn't look appealing, which is bizarre. The question is, where is that money going? I don't know. I was talking with someone who, one of their clients is a very, I want to say successful. He has a lot of assets under management, financial planner, wealth manager, and he had told my friend that he saw nearly 50%, a little bit lower in the mid 40s, of people just close out their accounts that have had it with him for a very long time. I mean, these people are very scared, right? And, you know, in the past, you know, you flee to government debt, but if you're having concerns over sovereign risk, I mean, do you do that? And I would wager probably not. You know, so the question is going to be, where's the money going? Something like crude, I think, has departed a little bit from market dynamics. We're coming into summertime. This is going to give us some pressure upwards. You have a lot of restrictions on crude that can kind of send this thing up a little bit high. I'm looking at Gush in particular. Not yet, but it's something I'm working on. Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Let's take a look at what we got going on. He's SPY trading off 2.16%, Composite off about 2.72%, 15,176. Dow Jones Industrial trading off 1.48% at 37,368. Crude trading off nearly 4%, down 3.94% to the downside, of course. And then the gold contract. Ooh, green in the sea of red, trading up 0.68% at 2,993. It, of course, is a Tuesday. So what we're going to do in that case is go over to ord-oracle.com. That is ord-oracle.com. This is the website of Tim Ord. Tim comes on every Tuesday and Thursday to share his analysis with us. You can go to his website, check out his newsletter, check out his book. Additionally, you can go over to the services tab right on TFNN.com. We have two fantastic webinars of his to have you check out. Tim, how are you doing?
Good. You know, we're going to speed up things here. We
totally.
But anyhow, let's go to this chart right here.
Yeah.
And we were going to look at the bigger picture down to the smaller picture. This is just a small picture. I put this out, I don't know, 3-4 hours, probably 3-4 hours ago. But anyhow, this pattern down from this high back down to here is a 3-gap play. In other words, you get 1, 2, 3 gaps, the exhaustion gap, market comes back down. If you notice, this volume's really high here.
Yeah.
High volume lows are always tested. I can't say always, but 90% of the time, high volume lows are tested. I'll put it that way. And today we gapped up, tested yesterday's high, and it's going to be a lighter volume. So what that says is you can't take out the previous high, the market will take out the previous low.
Yeah.
So we're going to test this low yesterday, and we're making an attempt to test it right now.
Yes.
If you look at the trend, we're at 3.12, and we got 1,287 downtick readings. That's going to be a buy if it stays anywhere in that vicinity. So most likely it's going to put we're not quite down to the lows. That probably lows will be touched tomorrow, but we're not very far from it. And the way my newsletter works, I only take it on the close. I can't really take it intraday, so I got to anticipate kind of sometimes the market. So probably I doubt we'll test yesterday's low today, but if we do test it today, volume is going to be a lot lighter than yesterday. So you got to test our previous low and lighter volume, which is bullish. You got a trend that most likely is going to close above 1.2 today. We're at 3.53, so we're talking.
Yeah.
And most likely we'll have things change here next 15 minutes, but most likely we'll have at least 300 downtick readings today. We're 1,300 right now. So this is actually a pretty powerful signal if it develops, and most likely it probably will. But we're going to touch yesterday's low probably tomorrow. And normally 3-gap plays to the downside have an upside target to where the pattern began. So you get a buy around 480, and it's going to have an upside target around 570 or 560. So it's going to be a monster trade to the upside. And these monster trades always develop by pretty much extremes in the ticks and trend. And we're pretty closely getting that here. It always comes on the close, not an intraday. Intraday doesn't really mean squat. But so anyhow, we're probably going to hit yesterday's low, rally back up to somewhere in this vicinity, 560, area. Then from there, we may come back down again. The reason why I'm saying that, if you look at the 10-day trend, this is yesterday's close, not today. It's 102. That's basically neutral. So that's a 2-week period. The next one's lower is a month period, and you need this up to around 1.2 also.
Yeah.
We're less than 1, and the one below it is a 3-month one, and you're about 1 there. So that's the reason why I'm saying you're probably going to go back up, test this low, come right back down again. And once the major lows start approaching, you get the 10-day, probably 1.2 or higher. You'll get the month, 21-day, 1.2 or higher, and most likely it's a 3-month higher in the 1.2 or higher. So we're going to see quite a bit of chop probably over the next several months.
Right.
But since the market's kind of really blowing out right now as we're talking here, we're going to see some huge volatility probably the rest of this year.
Yeah, I agree.
Probably in September or so.
Yeah.
So I wanted to get that in front of you. And actually, we want to look at the gold market. So probably a bicycle on tonight's close, unless these trend ticks change dramatically from where they are right now. But let's look at gold real quick. This is the top window is GDX, and it's a 3 drives to a top pattern. How you define if there's 3 drives to top patterns is on the retracement off of wave 2 high. So you got a high here, you got another higher high, and you look at the retracement. The retracement has to be 61.8% off of the previous rally up. So we did more than that. We, it looks like about 80%, 75%, whatever. And off that wave 2 high, you have to have volume increase. And obviously, a volume compared to this up leg, and you look at this volume right here to this leg going down, it really increased. So it's got all the hallmarks of a 3 drives to a top pattern. What happens next is a rally to new highs. And the next rally up won't be as high as the volume's pushing down like this. You'll have something maybe looking like this. And you'll hit a new high, probably up, 50, somewhere in that vicinity. And you'll go up, hit that high, and you come right back down again. And what the target is, 3 drives a top pattern, which I think this is still in the process of completing, as a downside target where the pattern began. And in this case, pattern began right around 39. So you're going to go back up, come back down, and 3 drives to a top pattern are not long-term topping patterns. What they say in the books is 3 drives to a top pattern is a timeout in an uptrend. So you're going to go up. Everybody's going to feel like, aren't we smart? And they're going to come back down, blow them out at 39, and go right back up again.
Yeah.
So if that happens to the gold market in GDX, you could imagine what's going to happen in this. It's probably going to be something similar. You're going to go back down, all the way back up, and possibly come all the way back down again. Just the reason why I say that, because I think that's what this market's going to do. So big opportunities here. I think GDX is going to be probably already buy. If you notice, this day here was this day here. This is a selling climax, which basically stops the decline. You get an increase in volume compared to the previous days of about 50% or more. It usually halts the decline and can halt the advance. So this is an exhaustion move to the downside. This is the retest, which is the lighter volume. You closed above it. It's already on a buy signal. And so the next rally in the gold market is up, just like probably this market here is going to be up.
Yep.
So both markets are going to rally together. So it's going to be fun. It's going to be profitable, but you don't want to stay too long to the upside, because the next decline's probably, you're going to hit this gap, and you're going to probably come right back down to make another test of this low. Yep. So we'll see how all that. That's a lot of predictions, but I've been through these markets before, and I've seen these patterns before.
Sure.
And my best trades come out of high volatility, as most of my trades work. So, but anyhow, I got to get going because I got some emails to write.
Fantastic. So, Tim, thank you so much for joining us. We'll see you Thursday, all right?
See you Thursday. Sounds good.
Folks, check out ord-oracle.com. You can get his newsletter, get his book. Promise you, this is some good stuff. Stay right there. We'll be right back for a short segment right after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. Yeah, I know Tim Ord is a little bit short for him today. We both had, he had technical difficulties and he had to run. But check it out, ord-oracle.com. If you need some more Tim Ord, of course, you can go to our YouTube channel at Tiger Financial News Network. We have a bunch of archived interviews with him. Man, the question, what are the odds Trump caves tonight? Man, I feel like that's tough. Like, can he do that? Meaning, Basil actually had a really good exposition earlier on this, where he's kind of like, it's more the perception that he wins, right? And that's very true. If he admits and he kind of, caves in, I don't know if that's necessarily good for his personal image, and not even I'm sure his followers would be okay, but in his mental, yeah, Trump won't cave. I don't think so either. Now, of course, what I think China's probably going to do is they're devaluing their currency, right? It's going to make it easier for people to get exports from them. It kind of screws with their imports, although they don't really import that much from us in any big way. They supply a lot of the world, right? I know people say hey, we're going to screw up China pretty heavily. And it's to some extent that will be bad for them, but it's a different kind of animal now. That's what China is. They supply a lot of different people. They finance different countries now. They have almost like a global power in a major sense as far as like political influence is concerned. They're getting close to it with financial influence. Now, I don't really buy the whole BRICS thing. I don't think it currently is a massive threat to the U.S., but that doesn't mean it doesn't become that way. If we keep getting dollars pressure to the upside, you're going to have some problems. I also don't think they're flooding treasuries. I don't think they have a lot of treasuries, compared to the outstanding. I think this is just capital flight out of everything. Folks, thank you so much for joining me. We'll see you tomorrow morning with Tommy O'Brien for the 9 a.m. morning market kickoff. Take care.